What's up YouTube and welcome to a new video. Now the Ferrari F430 market is perhaps in a difficult spot right now. On the one side we have the 360, which has quite a strong fan base, and even though that the 430 might be mechanically better than the 430, I think that many people would still prefer the 360 over the 430. On the other side we have the 458, which is of course the last one with a naturally aspirated engine. And it seemed to have gained a lot of popularity in the last year. So what does this mean for 430 values? Did they plummet? Or did they perhaps ride on the strong used car market which we've seen in the last year? That is exactly what we will find out today, as I will show you how much the market changed in 1 year's time. And as always, we will take a data-driven approach. Let's start now by having a look at today's market. You can see that we have the model year on the horizontal axis and the price on the vertical axis. You can also see that the Scuderias are displayed in blue and the normal 430s in orange. Now, I don't need to tell you that the Scuds are a lot more expensive. In fact, they tend to cost on average $180,000 more than the normal model. Supply for the Scuderias is, however, larger than I thought. There are 25 cars for sale versus 55 for the base model. You can also see that these two cars here are priced exceptionally high, and that is because they are manuals. Alright, let's start to figure out how much the market changed in 1 year time, and we will do this separately for the base and the Scuderia market. For both, we will first look at the development over time and then figure out how the depreciation curve shifted for the depreciation per year and per 1000 miles driven. Let's start with the base model and we start with the price distribution. You can see that for each date we have a different distribution. One for February 2020, May 2020 and February 2021. And note that I only included the automatics here. The manuals are not included. Now then, you can see that the blue distribution, so the most recent one, lays towards the right hand side of the green and the orange one. Hence, prices increased. In fact, they increased with $7,000. And this increase is statistically confirmed. And this means that it is unlikely to be the result of chance. Yet, did the whole market increase or just certain market segments? To find the answer to that question, we need to drill down deeper into the data. And we can do that with the following graph. Here you can see the time on the horizontal axis and the price on the vertical axis. Each line represents the value development for a single model year, and the lines are based on the median price points. Now if we look at the development of the lines, then we can see that the ones for model year 2009, 2006 and 2005 look a bit strange. I mean, if you own a 430 for model year 2009, I'm sure you're very happy with this line over here. But unfortunately, these strange lines can't be trusted. But more about that later. The ones from 2007 and 2008, however, are more trustworthy. These lines show that in 1 year time, the 2007 cars lost $2,750 or 2.3%, and the 2008 cars lost $3,000 or 2.3%. And these are quite respectable numbers. I would even say that they are so small that you can't really speak of a price decrease. The decrease is then also not statistically confirmed, and this means that it can be the result of chance. Let's look now at a bit more detail to this market to see what is going on here. Yet, before we do this, please remember to support the channel by smashing that like button. So, more analysis. That we will do with this graph over here. You can see that we have the model year on the horizontal axis and the price on the vertical axis, but that each date is now displayed with a different color. You also need to know then that the black axis displays the median price point. Now first, this graph shows that there's a very large shift in the depreciation line. However, just as with the value change which we saw for some model years, we need to interpret this change with some care. You see, for model year 2005, 6 and 2009, the market supply is much smaller than that it was the previous two timestamps. And this means that we can't get an accurate value representation for those model years. Nevertheless, for model year 2007 and 2008 there are enough cars for sale. And as we saw, the value decrease was extremely small for those model years. And with that out of the way, let's look at this market from a mileage perspective. After all, it might be so that the value change is only driven by the low or the high mileage cars. Moreover, for cars with this age, model year is no longer an important price driver. Here you can see that we have now again the date on the horizontal axis and the price on the vertical axis. And this graph is similar to the one which you saw before. But the lines display now not the model years, but the mileage categories. For example, the red line shows the value development for cars with a mileage between 21,066 miles and 56,475 miles. Now when we evaluate this price development, then we can see that this is the same for all mileage categories. Values dipped slightly between February and May, but recovered quite a lot. Now it fluctuates a bit depending on the model year, but on average, prices went up by $7,000. Let's continue now by having a look at the mileage to price relationship. Here you can see now the mileage on the horizontal axis, the price still on the vertical axis, and you can also see that the dates are still indicated with different colors. The first thing which you will probably notice is that the blue line lays above the orange and the green lines. And this means that a car with a given mileage is more expensive now than that it was 1 year ago. But we already saw that in the previous graph. Now when we look at the depreciation per 1000 miles, then we can see that it didn't really change during the year. The base model still loses 1500 per 1000 miles or 0.9%. Yet we can see that the shaded area for the low and higher mileage cars increased. And this means that there's an increase in certainty in the pricing. Therefore, like with most of the numbers in this analysis, we need to be a bit careful when we interpret them. Alright, to sum it up, values dipped a bit in the beginning of last year, but then increased again during the second half of the year. So good news if you are a 430 owner. But does this also go for the Scuderia market? That is what we will find out now. We start again with the price distributions. Here you can see that they look a bit different than for the base market, but that just as for the base market, prices increased slightly. The median price went up with $25,000, but I feel a bit like a broken record here. We need to be careful with this number. Let me show you why, but I will go through this rather quickly. If we start with the price development for each model year, then you can see that we only have 2 model years and that, how do I put this? The graph is a bit strange. 2008 cars lost around $10,000, while 2009 cars gained around $20,000. If we switch then to the mileage versus price perspective, then we can see why the numbers are so strange. First, supplies of Scuds decreased drastically. Last year there were 31 cars for sale, in May this was 30, and now it is down at 25. Moreover, you can see very clearly that the Scuderia market consists out of 2 markets, one for the Spider and one for the Coupe. However, today's Coupe market consists only out of 8 cars, and this makes it difficult to draw any conclusions based on the results. We will therefore zoom in now to the Spider market. And since we only have Spiders from model year 2009, let's immediately look at the value development for the different mileage buckets. This namely shows that for all the mileage categories, the values increased over time with a median increase of $20,000. But before you run to your dealer to cash in that positive equity, wait a moment, there is more to it. If we namely switch to the mileage versus price graph for the Spiders, then we can indeed see that the orange line lays above the other lines. Hence, prices increased, but not as much as $20,000. The $20,000 number results to some extent from the values which you choose for the mileage buckets and hence from the few number of data points. It is then also so that when you look at the full Spider market, you can see that values increased with $10,000 from $305 to $315,000. And I think that this is a far more realistic estimate than the $20,000 we saw before. However, due to the few number of data points, it is not possible to statistically confirm this increase. And with that, let's wrap up and conclude. So, the F430 market. We saw that over the last year values have been quite strong and that especially the ones for the base model increased. And this of course is in line with the strong used car market which we've seen over the last few months. Now what perhaps surprised me the most is that after the market dip, values increased more than with the amount with which they initially decreased. Moreover, the increase is carried across the market. It goes for all mileage categories and for all model years. Hence, the 430 is a relatively safe place for your money. But that doesn't mean that you can't lose any money on a 430. Let me explain. First, when you use them for what they are made, driving, they will lose value. That's nothing new. Second, the price increases which I showed you are based on increases in median prices. And therefore, it doesn't mean that each and every 430 out there went up in value. It of course can be so that there are some outliers which actually decrease in price. And that's very important to keep in mind here. Now when it comes to the Scuderia, the story is a bit different. First of all, there are very few observations available, which makes any sort of quantitative analysis a bit sketchy. It is then also very easy to present the numbers in such a way that they suit you best. Nevertheless, if we look at the full Spider market, without any breakdowns or manipulations, then we can see a slight price increase. It's just not possible to verify this statistically. And this means that the price increase can be the result of, for example, a change in market composition. It can be so that there are more high-spec cars for sale right now than that there were 1 year ago. Now second, the Scuderia market is a niche market inside a niche market. And this means even more so than with other cars that advertised prices only tell part of the story. For example, even though that this is very unlikely, it might be so that the advertised prices increased, but that also the dealer discounts increased. And this would result in a net price change of 0. And with that we arrive at the end of the video. Now if you enjoyed this video, please remember to support the channel by smashing that like button. Also don't forget that you can comment down below with a car for which you would like to see an analysis. Once there are enough requests for a certain car, I will make a video about it. Don't forget then to subscribe and click on the notification bell so you will actually be notified when your requested analysis goes live. As always, a huge thank you for watching and I hope to see you next week for a new video.